We are here at MJG Studios for the latest installment of the Community Pulse, where we take the pulse of community so we can take action. Welcome to PCS's MJG Studios. This is the Community Pulse.
Welcome to the Community Pulse, where we take the pulse of the community so that we can take action. I'm today's host, Courtney Smith, and I'm here with Leslie Flores. Leslie is the VP and Community Development Manager at Old National Bank Corp. Thank you so much, Leslie, for being here.
Thank you for having me.
Yes, how are you doing this morning?
I'm doing well compared to the snow, but it's, we'll be fine.
Yes, and I just want to make a note that Leslie came from all the way by O'Hare. So let me tell you, we are so gracious and so thankful that you were able to make it this morning.
It wasn't bad, even though there's snow, the traffic wasn't bad.
Okay, good. Now today we're going to be discussing banking and credit basics. Let's just start out, for someone who has never had a bank account, what are the first things they need to know about choosing the right bank or credit union, and what should they watch out for?
So one of the things that I encourage people is now it's a little bit easier. There's an online that you could do your research before you go, but try to go to a local bank that you could go close. And I always tell people, ask a lot of questions and be able to find a bank that meets the needs, meaning that the balances that you typically have are going to be there, because we don't want any fees in your accounts, because that's the last thing you want. Be in a bank that is charging you a lot of fees. So try to compare the different banks that are out there in the community that won't give you a lot of fees, and somewhere that you feel comfortable too as well.
Okay, and when you say fees, for someone who's not, like, let's just say, I've been under my parents, or I may have had a life where maybe I wasn't dealing a lot with banking, and so now I'm like, okay, I want to have a bank account. What are some of the fees that I need to be aware of?
Some of them ask for like an average balances that you have to maintain in a month. If you don't maintain it, then there's those fees.
Okay.
So just again, try to have an account that you feel those average balance will be there, and that a lot of them ask for direct deposit, those kind of things. And also they ask for you not to get mail. We went everything online and digital.
Yes.
So again, try to get to an account that you feel that you're able to do, because again, everything adds up to fees, and we don't want that.
Okay. And then what would you say, I know some of the fees are not the overdraft, but like the monthly, a monthly fee to actually have my money in a bank account. Is that something I should be aware of, or is it something that I should avoid, or in some cases, is that something that I should look for?
Well, those part of that conversation.
Okay.
What monthly fees are there, right? And some, like I said previously, it's about the balances that you're going to maintain.
Okay.
And that's how those fees comes. It's not as the overdraft is mostly sometimes if you don't have those balances, then fees add up.
Okay.
And, they'll waive them. But when it gets to too many, there's, a time that you feel like maybe this is not the right account for me. Maybe I need something else. Because right now, again, I always tell people, go talk to your banker, make friends at the bank. Where everybody's friendly.
Yes.
And tell them your situation, and they'll work with you. So do that when you go to a bank. Again, don't feel like intimidated walk into the bank. Everybody's there from the community, and everybody's friendly.
Yeah. And I like how you said, look at something close to your neighborhood, develop a relationship, because I know for a long time at a bank that I'm actually still banking at, the thing was you could avoid the monthly fee if you had direct deposit. But at the time I was working for a temp agency, and we did not have direct deposit. And so I would go in every week with a paper check. And I remember calling, I don't know if I called or if I had a conversation with the teller, but it was someone at the bank where I was like, okay, I know this is the requirement, but you can clearly see that I'm depositing a check from this business every month. can that fee be waived? And they ended up waiving it. So that's really important. Like, I don't think people realize that you do develop a relationship with your banker.
Yeah, you do, and you want them to know, what your situation. That way they could help you. Because again, if they don't know, for instance, like you said, your job's changed. If they don't know, then they just assuming that the same bank or the same job that you have, and so that's not going to work for you. Or maybe they'll be like, maybe account is better for you now. Maybe we could change it back. There's nothing wrong with it, but just build those relationships with your banker is very important.
Okay. And what is the difference between a checking account, a savings account, and a money market account? And what does like the average person who doesn't know a lot about banking or how accounts works, what do they really need to know about all three?
So the checking is kind of like what you use every day. That money that you have that when you go to the store, that's typically what you're going to be using every day. Your saving is something that you don't want to touch. I can tell people you need to pay yourself first. So put that aside, even though $5 or $10, that's money that you don't want to touch. And then your money market, that one, which savings also earns you interest. Checking doesn't really earn you any interest. Money market, they do pay you interest, but there's certain transactions you can make. For checking, you can make as many transactions as you want. But for a money market, there's only a limit of it, and they pay you a higher interest. But the most common ones are your checking and your savings. Again, savings you don't want to touch unless it's an emergency. Checking is your everyday account that you want to use for any shoppings that you're on.
Okay. And then for the money market account, who is the ideal person for that? Like, who would you recommend if someone came into the bank and they met a certain type of criteria and you would say, okay, yes, this person is a good candidate for a money market account?
Typically, those have higher balances.
Okay. So the people who have the money in the account.
Yeah. Yeah, that would be like more on your third account. Okay, let me earn a little bit more interest. I might use it, not often, but we ask for higher balances to maintain.
Okay. And when you say maintain, you mean keep it at that amount. Okay.
Even though you might use it to purchase something, but you need to keep it at higher balances.
Okay. And can you break down what a credit score actually is and how it's calculated?
So the credit scores, I know that, like they say here in the United States, we like debt.
Yes, a lot of it.
So that's how you start your credit by, most common is your credit card.
Yes.
That's how you start your credit. And a lot of times that's how you start, building your credit score by having a credit card. But you need to pay it back. And the faster you pay it, the better it is, and your credit starts building. But if you have too many, credit cards, sometimes it's not a good thing because you have all these credit. But when you close them, that also impacts your credit too.
Okay.
Don't have too many, and then again, don't close them too as well. Try to keep it and pay them right away.
Okay.
That's how you start building your credit. And there's other ways that you could build it. I know that there's people that have had not a good credit. So there's ways that you could help them build those credits, again, by paying it off. But there's also, the banks have like little programs that help you build your credit back again.
Okay. That's good to know because I honestly didn't know that banks had that. So good. Why does credit matter so much in everyday life? Like if I was renting an apartment or getting a job, like why? I mean, credit's like, okay, well, this is my credit card. What does this have to do with this over here?
I mean, I think that's how they see that you are a responsible person. That you're going to pay me back. And they see the record of like, okay, you've been paying back, But nowadays, like you said, your credit is also built with your phone. When you want to get a phone nowadays, they look at your credit. If you want to buy a car, So those are ways that your credit is, being looked at. But apartment has become something common now. I don't think was in the past, but
Yeah.
now it's very common that they're pulling up your credit or seeing your credit to be able to get an apartment.
Okay. And how does interest work on a credit card? And what do people need to understand about APR before they start swiping like, oh, I've got all this money available, I can just buy.
Yeah, no, I mean, I know there's a lot of new regulations that some interests have gotten lower, but the credit cards have the highest interest. And sometimes they don't disclose it as much as we would want. You have to read the fine print about it because sometimes they'll just show you like, oh, 0 interest the first, 6 months, and then the next 6 months it's at 20% or something like that. But it's important to read those fine print on these credit cards because, again, it's very high interest rates that sometimes even though you pay the minimum, it's not bringing down the balances.
Yeah. And what is the difference between a secured credit card and an unsecured credit card?
So the secure is basically you having kind of a loan in a way.
Okay.
And you have a part of it is that they're able to, if you don't pay it, they're going to get that from you. Unsecure, you don't have nothing that the bank is able to get from you if you don't pay it.
Okay, so with a secured card, even though it's a credit card, would people use their house as collateral or what's?
Yeah, it could be a house, but we don't want to get
Right.
that.
You don't want to make people homeless over a credit card.
Yeah. Try not to get too many credit cards.
Yeah.
Especially at the stores right away. When I go
Yes.
to the stores, they're already telling you, get a credit card. This would help you. You're like, yeah, no, but again, that's why you want your checking. That way you're able to spend money that you have.
Yeah.
Don't spend something that you don't have. But I know that there's times you have emergencies and you want to use a credit card
Yeah.
because you don't have that. But make sure when you do use it, you know that you're at least are able to pay a big percent of it. And then next month you're able to pay the rest of it.
Okay.
Don't let it sit there, these balances, for a long time because you're paying more interest than the balances. And
Okay.
that's how people get into that debt.
Okay. And now I want to go back to the actual like bank accounts at the banks. How do overdraft? Oh, wait a minute. We already talked about that.
The overdraft? Overdraft
Yeah,
is
like
typically that you're using money that you don't have.
Okay.
And so the banks sometimes will, when you open an account, they'll say to you, do you want to opt in or opt out for overdraft? And that's where you have a savings, right? So when I go buy something and maybe I overspent it, it's not in my account, so then they'll pull that money from your savings, or sometimes they'll pay it, but then there's a negative on your account.
Yeah.
So if you don't put that money back in there right away to make it at a positive, then that's where the overdraft fee starts coming in.
Okay. And
So don't spend money
that you don't have. It goes back to not spending, which I feel like in this economy, it's a little
It's hard.
It's so difficult, but yeah.
And it's temptation because now it's like the phones, anything that you look at, they keep popping up on
Yes.
things that you look at, and you're like, okay, I just buy it. It's on sale.
Right? I'm one of those people. I'm like, oh, if it's on sale, and then if it's like the last one available, I'm like, that is God
That's how they
telling
get
me
you.
that it's for me.
That's how they get you. You're like, oh, yeah, it's on sale. Let me buy it. And then, but you don't have that in your account, and then you put in your credit card, and then it's just like, and
Right.
sometimes it doesn't become a sale anymore.
Right, exactly. When you look at, and then someone, I forgot, this was years ago, someone had phrased it like, look at how much you make an hour, look at how much it costs, and then figure in how many hours did you have to work in order to afford that particular item. And when it was broken down that way, I was like, I work quite a few hours.
Yeah, and there's nothing wrong. I tell people to say that you're frugal. I'm
Yeah.
frugal.
Yeah.
I think about things 3 or 4 times before I buy it,
Mm-hmm.
which sometimes is a bad thing because I'm like, oh, maybe I should have bought it. And then when I want it, it's like not there.
Right. Understood. But like you said, just especially in this economy, you just have to be mindful.
Yeah.
And it's like, okay, well, if I want this, well, where can I sacrifice? Or where am I willing to sacrifice? And if I'm not willing to sacrifice, then maybe I don't need this right
Yeah.
here.
And I think the online has making it very
Oh, it makes it so easy.
so easy now
Yes.
to just buy things and returning, and that people are just spending because they're at home.
Right.
And
Yes.
they're just looking at stuff online and just buy it because you just click on it.
And it's there. I mean, even like when I'm on the train coming to work, if I just need to get something really quick, and then Amazon has spoiled all of us. You can either get it like next day or in 2 days.
Or within hours, depending on what it is.
Yes. Or like even like with Instacart, like I needed stuff to do laundry and ordered it on the way home from doing something, and it was there like
Yeah.
30 minutes later. So
And they're asking you right away for your credit card or any account that you have, and that's where they get you
yeah.
on ordering things that you might not have
Yeah.
in your account, and you just buy and buy.
Yeah. And then like now with Apple Pay, and then you can just use your phone. I know a lot of people are still intentional about going in their wallet and pulling out their credit card, because then in their mind they're like, okay, I actually made this transaction. But when you're just tapping, you look up and at the end of the day you're like, oh, wait a minute, how much did I spend?
Yeah, so I think that's where also people have to think about, like, for me, having cash is a bad thing. If I have cash, I spend it.
Okay.
Credit cards or cards, I think about it before I swipe it.
Yeah.
And there's people, it's the opposite. But that's why you need to know yourself.
Yeah.
Like, what are your, weaker strengths about having that? Like, some people, credit cards, it's easy to swipe. So maybe have a little cash instead. That way you think about buying something. But the phone has become easy too. You just,
Yes. You just tap. Like your cards are linked up and just.
even vending machines now.
Yes.
You just tap on those and then you're buying it.
Right. Long gone are the days where it's like, does anyone have a quarter?
Yeah. A quarter or $1 to put in. Now it's just tap into your phones. But that's
Yeah.
why I tell people, just think about what you feel more that you spend more. Is it just having cash in your hand? Maybe have more, or a credit card or something. But
Okay.
think about, don't be swiping too much.
Yeah. Yes, because that can get you in trouble.
And Amazon gets everybody in trouble.
Oh, yes. Because then it's like stuff in the house. I'm like, well, do I really need it? And I'm like, well, so.
Yeah, because you just click on it and they have your accounts there. And that's why I think people are getting into a lot of debt or their credit scores,
Yeah.
because they report them right away.
Yes. Yeah. Indeed. If you could give one piece of advice to someone who wants to have a strong, healthy relationship with their bank and their credit, what would it be?
Like I said earlier, just make friends with your bank, with your bankers. They're there to help and support you and guide you. That's how I see it, because a lot of times now you don't see people walking into a bank anymore. And I feel like our communities, they don't see as many banks anymore. And the reason is because no one's walking into the bank, because everybody's just using their online. But it's important to have that connection with someone at your bank so they could guide you and be able to help you with what accounts will be work, and make friends with, sometimes we're all going through situations in your life, and you talk to your banker and they'll help you.
Okay.
So that's how I feel, like, try to go to a bank and talk to them and let them get to know you.
Okay.
Because, again, online, there's no interaction.
Yeah.
And yes, you could open accounts online, but it's just not the same.
Yeah, it really isn't. And to your point, I was banking with this one company or with this one bank and was accruing a monthly fee. And I'm like, but the other bank I bank with, I don't have a monthly fee. And so they tried to work with me, but it still could not get rid of that monthly fee. And I remember one of your peers said, well, go into the bank. Like when you talk to a banker, it's very different than when you call a 1-800 number. I never did it. I just ended up closing the account. But what she said did stick with me. Like you said, go in and establish relationships. I think people don't realize how important verbal, face-to-face communication is. I know like we're behind our phones and behind our computer screens, but that face-to-face communication is essentially what might get you out of a jam when you need it.
Yeah, I know that communities always are saying, oh, there's not a closed bank by me, or they're closing. We're not the banks are not being closed just to close. It's because if there's no traffic, no people coming in, then why are we going to have a bank open, right? Because data is so easy to gather now.
Yeah.
So banks are always looking at data. So they feel like more people are doing online, so they're going to close. So again, if we have a banking center, try to visit them. Try to, that way this stays open.
Right.
That's why places get closed, because no one goes.
Okay.
So that's one of the things. Just, make friends and go visit the bank.
Yeah, I like that. Anything else you would like to share?
Just like I tell people all the time, I said earlier, pay yourself, try to save a little bit of money.
And when you say pay yourself first, what does that mean?
So we all want to put all our money into our checking account because we like to buy things, right?
Yes.
But pay yourself, what I say is put at least, depends on what you make, $5, $10, $20, once or twice a month, whenever you get paid. Put that money to the side into your savings account. And at the end of the year, you'll realize how much money you have saved.
Okay.
And what that helps you is when an emergency comes, you don't have to use your credit card or other sources. You could use that to pay for whatever emergency, and that doesn't put you into, struggles with like a credit card.
Okay.
You're able to pay it right away, but try to have at least 6 months in your savings account.
Okay.
For any emergency or any situation that happens in your life. I feel it's important to just have 6 months out there in your savings account.
So 6 months of what?
Savings for any situation, like your rent. Like if you lose your job or something happens in your life, that at least you're able to pay any bills, rent, or anything for at least 6 months.
Okay.
That's kind of the rule of thumb that we all try to.
Okay.
I know it's not easy.
Yes,
It's
especially,
not easy.
it's just because things are so expensive nowadays. Like, I feel like if this was 30 years ago, it'd be, yeah.
It's not easy. I know you're like, oh, you're saying, no, but I know it's not easy. Even you see people working at the bank, they also have challenges too.
Okay.
So don't feel like you're the only one. We all have challenges when it comes to, money or any of that, but we all have to try a little bit to be able to not get ourselves into debt, because we all eventually want to buy a house or a condo or a car, if that's something that a goal of you. But part of it is just to have that little money saved, and as well as your credit is part of it.
Okay.
That everybody looks at when they want something.
Okay. Well, thank you. Thanks so
Thank
much
you.
for being here.
Thank you for having me.
Yes. Thank you so much for tuning in today to the Community Pulse. It was so nice having our guest, Leslie Flores. And Leslie, if you just want to tell the viewers the bank that you're at and how they can find you.
So the bank is Old National Bank, and we're a Midwest bank, and we're all in our communities everywhere, in our Illinois market as well as in our south suburbs.
Nice. Very nice. Thank you.